Hello and welcome to our weekly analysis video. Now it's a little bit late. Right now it's Tuesday, 11 a.m. Eastern Standard Time. Many of you know it's been almost a month since my last video. Now, of course, I took a personal break after unfortunately, my dog passed away. So originally I was just going to take a couple of days off, but I was really sad, and that's why I decide, just not to force myself to back to the market. And that's perhaps one thing I like to share with a lot of traders is you have to always understand your psychology or where you are psychologically is very, very important in your trading. Now, you might be thinking that the analysis is important or the technical skills are important. All those are true. But if your psychology is not well, what's gonna happen is really the management part. Because you could still take a trade, but if your psychology is not well, then a lot of things are going to happen after you took the trade. You're going to doubt yourself. You're going to second guess your analysis or your signals. So, understand that if you are not psychologically well, no matter where does it come from, maybe from your personal life, a tragic event, things like that, or even just a small thing, maybe you had a big fight with your partner, then try to take into consideration, you have to be able to understand where you are. So that was what happened to me. I took longer than what I expected. Basically, I still trade during the month, mid-August to mid-September right now, but very, very passively. So that's pretty much what I did in the past month. Basically, just the morning period. So let's talk about what's happening. Let's talk about what's happening. Just what's happening to market, basically. So of course, many of you know, since mid-August to September, we did have many things happened. Let me pull out a calendar. Let's just quickly go over it. Just quickly go over what happened. Let's see. This is the day my dog passed away. So I stopped trading mid-August, and right now we are at September 19th. All right. So I just quickly glance through, see what happened, see if we have anything that's important. I think just on back of my mind, the most important thing is the recent British pound surge from last week. Now, of course, if you have been trading in the market, you know the strength from British pound. If you take a look at cable, if you take a look at pound yen, if you take a look at pound New Zealand, now all these in a very similar pattern all came from the same event. We had a higher than expected inflation from UK, and the Bank of England rate decision, although did not change, but they did hint that they have to basically raise the interest rate or do some major about it in the coming months or so, very, very soon. Because the fact is that right now inflation is at a very high level, and previously we say that they do have the pre-exit negotiation risk. They still have the low wages. All those things are true, but the fact is that if the inflation keep going higher, then they have to make sure it's under control, and that's basically that was the problem. But right now, basically, that become the main focus. So understand when people say, how do you follow the central banks? Because there's so many data to look at, right? There's so many things to take into consideration. So the very simple thing is that you always watch out what the central banks is focusing on, and that's really the most accurate guideline you can have. So for example, I keep saying that for US, back at beginning of this year or previously, the non-farm payroll was always very important. People always focus on the job numbers. Now, since last year or beginning of this year, the job is really in a full employment, and that means that the numbers become less important for the central bank, and now they're putting their focus on the wages. And that's why if you have traded the previous non-farm payroll, you realize that what's driving the US dollar, what's driving the volatility has been about the wages. It's not about the job numbers. So the wages are always a consideration, but because the central bank has specifically said that's what they are going to focus on, so that's what we as a speculator wants to follow with the central bank. Just a rule of thumb is that you never ever want to go against the central bank. Now, of course, there's many different ways to trade. I think a lot of people, maybe there are some traders who do trade against the majority of the market. But for me, my rule of thumb is I always try to follow the central banks, because that's where the big money is going to follow, and that's where the trend actually is, fundamentally speaking. So for UK, the inflation was the issue, but now it become a real issue just because the central bank has purposely kept mentioning about it. So that was the second catalyst happened last week to drive up British pound. Now the third catalyst comes from Friday and Thursday, I think, London session, when one of the most dovish member from Bank of England came out and gave a sudden hawkish talk. Now basically he completely switched his positions. Now that is something very significant. Now a lot of people say, how do you judge which central bank officials, how do you know which one of them is important? Now, it's not so much about which one of them is important. It's when incident like this, when a dove becomes a hawk or a hawk becomes a dove, when a person that is known to have a certain position or status certainly change that position to, sort of like, if you have a Republican suddenly become a Democratic, then that's an important event. So that's basically what happened last week to basically kick off the British pound. Again, if you look at all the pound pair. And aside from that, I think another thing in August, just the back of my mind, is the Bank of Canada. That's in September, beginning of September. They also raised the interest rate unexpectedly. Now that also put Bank of Canada at the top of the currency right now. So they have been largely bought off since the first hawkish comment from Bank of Canada. That was back in June, I think. And then July, August, and then September. Now they are really on a certain hiking cycle. And the thing about that is the fundamental data have backed up pretty well. So if you look at the Canadian data, is that previously when they decide to raise interest rate, market was very, very doubtful, because the data hadn't been able to back up. The beginning, when they was trying to raise interest rate, the reason was because they think the economic model has predict what's going to happen in the future. So they were actually ahead of a lot of central banks, and they were quite confident about their models. Now, market of course remained doubtful about that. However, after the comment, after they raised the interest rate, and what happened is that the model, we can say the model is correct, because the data follow through the rate decision had been quite positive in terms of their GDP, in terms of their job data. The job data had always been very positive, but the most important thing is about the inflation data had been quite positive. So that all push Canadian dollar to a very high level. Now, if you look at, again, you look at the CAD pair, CAD yen, CAD Swiss, all this general uptrend, even all this New Zealand, even you have this kind of retracement right now. If you zoom out, it's a very, very steady downtrend. So CAD is another strong currency and still remains strong. Another thing is, I think in back last month, I think it's euro. Basically, euro has lost the strength. So don't know if you guys remember, but back in June and July, it was really a euro ride. If you zoom out here, look at the beginning of the ride here, really coming from, let's zoom out more. So we have this downtrend hitting a new low, and maybe you start from May, you have this continuation of uptrend for euro all the way until basically the end of August for euro pound. But if we take a look at euro dollar, I think it's in very similar pictures. But euro dollar is much better. We do not have a large decline, and that's because euro is still taking the more strength over dollar. But we stopped making any significant uptrend basically since maybe the end of August. Really just in the sideways movement, still between, below, slightly below 121 and still above 118. But all this uptrend was coming from June and July. Now the reason is because the ECB came out and basically start addressing the concern over the currency. They don't want euro to become too strong because that will affect their QE program. Now originally, the reason we have a QE is to really weaken your currencies, basically weaken the borrowing cost. So of course, if your currency become too expensive, the exchange rate become too high, that's going to give a contradictory effect. So now the central bank came out and purposely addressed that question or that issue. That really diminished the strength for euro. And now market really start thinking, are we going to have the tapering talk or not? Because it's been such a highly speculative event all through the past few months. And now we seem to be in a sideways movement because we don't have much catalyst going on. So that's really something significant for euro, because you can say that euro had a pretty good summer month from June, July, and August, and then it started losing the momentum at the end of August or mid-August, and now we are really in a sideways movement. Other than that, course, for other currency, for Japanese yen and Swiss franc, now many of you know, even if you don't trade currency, you know what happened in the North Korean. So the missile crisis continues, and of course that is the main drive for the safe haven currencies. Now previously we mentioned that one thing very interesting is that usually Japanese yen is a very strong safe haven currency when crisis happen, but this time Japan is under the direct threat of this event. So people want to know that whether the Japanese yen is still a good place to park your money if the country itself is under attack. The answer is that nobody knows, because this kind of thing hasn't happened yet in the modern currency trading. Now, of course, Japan had been in many wars in history, but since 19th century, well, they've been in World War I, World War II, but that just seems the modern time, or the time that I can remember. It's been a quite peaceful country, so no one knows exactly what's going to happen. Now, of course, you have to also remember back then when the countries are at war, we don't really have this kind of currency market. Right? Back then, currency is just a very closed market. It's not even tradable for retail traders. So these events, if Japan is really under attack, let's just say one of the missile accidentally hit the island of Hokkaido, then what's going to happen? The answer is nobody knows. But for me personally, just as common sense, that if you are an investor, or if you're just a person and your friend's house is on fire, now would you put any valuable goods at his house? For me, I wouldn't. No matter how much I trust that person, if the person's house is on fire, of course I want to first of all get out, and if I can take my belonging with me, that would be great. Why would I want to put more money into that? That's a very speculative movement. Of course, I always say that if the country is under attack, or like in the event of tsunami, you do need a large amount of money for infrastructure, so that will be a boost for the currency itself. But the thing is that if it really happened that Japanese under attack initially, I really don't know what's going to happen. But for me, because of these events, right now Swiss franc has become a more attractive safe haven currency for people to buy. And you can just tell by the chart. If you take a look at CAD Swiss and CAD Yen, look at that. So you have a very similar safe haven currency between Japanese yen and Swiss franc. But when we have a weakness in Canadian dollar, which this came from yesterday, the Bank of Canada official came out, basically give quite a negative talk to talk down the currency. So not something fundamentally important, but just give you an example here. If you take a look at CAD, the retracement for Swiss franc pair is way much stronger than the yen pair. Now, if you want to take a look at, let's say, pound yen and pound Swiss, you have a very similar picture, but because British pound is very strong, but even it's strong currency like British pound, you can still tell that pound yen is really in the sideways movement. The currency wouldn't be able to go down too much. But if you take a look at pound Swiss, you did have this kind of big red candle from yesterday and today. So basically right now, if you only look at dollar yen, it's the same thing. If you look at dollar yen, dollar Swiss, now dollar Swiss, obviously you have a huge drop, a sort of retracement, and now you are still really not even breaking the previous new high. Comparing to dollar yen, it's a one-way street. So it just shows you that Japanese yen has lost a lot of momentum because of the geographic location during this kind of missile crisis. So that's something you have to take into consideration. Of course, previously we say whenever you buy Swiss franc, you have to watch out for the intervention. But no amount of government intervention will be strong enough when a war really happened. So if really Japanese under attack or North Korean launch another missile attack to South Korea, things like that, I think the money will really flee into Swiss franc. And of course, SMB will try to intervene, but I don't think they have enough bullet when that kind of scale happened, when things like that happened. So that's pretty much what happened. And another thing, so I talk about British pound. So British pound right now for this week is still one of my very bullish currency to buy. But of course, you can just tell by the chart, everything is in a very high range. So I do want to wait for some pullback. CAD is also another thing I would like to buy. Also want to wait for a significant pullback. And let's just finish what happened previously. And that's pretty much, I think that's pretty much what's most important thing. Of course, you also have RBA rate statement. So for Aussie and New Z, nothing much happened basically for the past month domestically. Now, Australian dollar is still traded around the micro economy. So it's still traded around the commodity. So it's still traded around iron ore. It's still traded around the copper price. Now the copper price had been very, very strong previously, and that had driven the Australian dollar into a very high range. Now, of course, since the beginning of September, previous 2 weeks, we did have this kind of decline. Now, this decline, again, I'm not really a commodity expert, but this decline, I read a lot of articles saying it's just a temporary decline. Basically, we did have few disappointed Chinese data in the previous 2 weeks, and that's maybe the reason. But overall, a lot of hedge funds are placing a big bet in the copper market starting from this week. So that will be something to take into consideration. Iron ore is still in a quite nice level. Other than that, the domestic data from Aussie is really flat. So that's why the central bank doesn't provide any guideline either. The cash rate is still the same, and right now they are still in the inflation is still too low. The GDP is it's doing okay, it's doing well, but the most positive data had been the employment. However, it's kind of fluctuated, up and down, up and down. That's what happened to Aussie. Now, New Zealand dollar is a different story, because what happened is the RBNZ continue to be dovish just like before. But more important is the government of New Zealand. I think they actually came out in mid-August to downgrade the fiscal year projections. So they actually downgrade their projection for the future. So that's a kind of a very negative event for New Zealand. Other than that, biggest event is this week we're going to have the election coming out from New Zealand. Now right now I don't really follow this election, but basically if you want a story, a very very simple story, is that you have two parties. One is the a national party, the other one is the Labour Party. So the National Party had been in control of the country for many years, but right now the Labour Party has picked up. So basically the National Party is more like a right wing, it's more like a Republican, it's more pro-business. And now the Labour Party has picked up the momentum. So if the Labour Party is more like a left wing, it's more not as pro-business as the National Party. So just a very simple rule of thumb is that if the National Party gets elected, then everything is still the same as before. That will be considered quite positive for the currency. Now, however, if the Labour Party gets elected, that will be a drastic change for the country, for the first time, and that create uncertainty. And like I mentioned, every country, whenever there is uncertainty, it will be bad for the currency. So that's pretty much something you have to watch out for this week for New Zealand. And other than that, I don't think anything too important, but let me take a look. So key event for this week, we already are Tuesday right now. So Tuesday today, again, the really big event for this week coming up from FOMC tomorrow. Now, this FOMC will be important. The reason is because they are going to talk about the balance sheet reduction in this meeting. So previous meeting is not that important because nothing happened basically fundamentally for their data. Now inflation is still low, the wages is still not high enough, so market is not pricing any probability for the rate hike. But this meeting, they are going to talk about the balance sheet reductions, and they might give more hint to whether December rate hike is still on the table. Now, I don't know what's going to happen in this meeting, so that's why I don't have any US dollar trade right now. When you're trading fundamental data, there are many ways you can trade it, but personally I like to trade into the catalyst or trade after the catalyst. But there's a big difference. When you trade after the catalyst, you have a very clear fundamental reason to enter a trade because the catalyst has already happened. So what you're trying to do is to get into at a proper retracement level. That's a more experience-based skill, because really depend on where do you think the retracement is going to come in, what are the fundamental background for that currencies. Now when you trade into the catalyst, that's a more straightforward structure, because when I trade into a catalyst, that must means one, if the catalyst happen, the market will react to this way, and two, if the catalyst does not happen, the market still react to that way. So when I trade into catalyst, I'll give you example back then. I think back then I had a pretty good pound cat short. I think back in somewhere here. Yeah, that was not here, right here I think. Yeah, so this one. So you see this huge down cycle, and we have this retracement. So back then I had a pretty good trade. I short into a Bank of England. I short into the Bank of England because the catalyst was that the Bank of England is going to have a meeting. Now at that time I thought, okay, what are they going to talk about in a meeting? first of all, the inflation data prior to this meeting had been quite low, so they are not going to give any meaningful change because the inflation is not high enough. So prior to this meeting, all the fundamental data had been quite negative. So that's why I think, but we did have a rally over British pound before the meeting. So that means people are buying and hoping Bank of England is going to give a hawkish talk. Now this kind of thing is perfect for you to trade into it because the market has already getting over itself basically. Then why is it good? Because that means when the event really happened, you will have a buy rumor and sell fact effect. That means if the Bank of England really did give a hawkish talk, the market will not go anywhere but to go down because the rumor has already been bought. On the contrary, if the Bank of England did not give a hawkish talk, the market will also go down because of the disappointment over the expectation. So a same outcome from two different scenarios. That's where I would like to trade into the catalyst. It's when I think there are going to be a 2 to 3 different scenarios, but that's going to produce the exactly same outcome. But that's only that's rare. Okay, that's not happen all the time. So for example, this week FOMC, I do not know what's gonna happen, so that's why I don't trade into it. I don't even want to be in dollar right now. I will rather trade after it. Now, when you trade after the catalyst, of course, you always have the risk of missing the trade. But I always think it's okay to miss the trade because there's many opportunity in the market. It's okay to miss the trade than to have an unnecessary losing trade. So that's pretty much for Wednesday tomorrow. And then you have New Zealand GDP. But again, all the New Zealand data will not be that important in comparison to the election. So again, I'm pretty much not putting any New Zealand dollar trade for this week. And the Bank of Japan will have a policy rate and monetary statement. Now, this is, again, should be a non-event because right now the fact is that Japan is still in a very deflationary environment. So there's no way for them to change their QE program for now. However, the geopolitical event, again, for North Korea, that's something you need to be careful when trading Japanese yen. Also, that it seems to be rumored that the Prime Minister Abe is going to call a snap election. The reason is because Abe had a really low rating, I think, previous month or so. And right now, because of the North Korean issues, he actually regained his poll. And that's, it's same thing happening if you are interested in politics. It's same thing happening in every countries. Is that when the crisis happen, people always like to find something that's familiar. So a lot of presidents, including Donald Trump himself, when their poll rating are very low, they're always trying to start a war or to have this kind of heroism image, just to basically, forget about the domestic issue, forget about the economy. Now the country is at crisis. I'm the leader who is going to lead you guys out of it. So that's a very simple tactic for politicians to use. So for Abe, of course, he did not purposely use that. It just happened to North Korea and suddenly had this kind of missile crisis, beginning of the summer of this year. So that had increased his poll, and at the same time, the other party had some issues, which again, it's just a perfect chance for him. So he decided to call a snap election. But that's a rumor right now. It's not confirmed yet. But if that's the case, then you need to know what's going to happen. So what's going to happen if Abe is still a prime minister? Well, if Abe is still a prime minister, that means his Abe economic is going to continue. Means the QE is going to continue. Which means that the Japanese yen is still going to be pressured. It's still going to be a weak currency because of the quantitative easing. Now, if Abe is not the prime minister, then we have a different story. Then first of all, you're going to have uncertainty, that's for sure. Then we'll see what happened to the other parties' economic policy. But just something to take into consideration, to give you a heads up. Then the RBA always speaks. Again, nothing really fundamental from RBA nowadays. If you want to trade Australian dollar, really best way is to follow the base metal market, iron ore, or to follow the Chinese data. I find that's a much bigger drive for Aussie. And ECB Draghi speaks, BOJ press conference. This is all events that you can pay attention to. And other than that, I think the CAD data, CPI will be a good data to trade. Now, you have to understand all the data is just a single data. So when you trade a single data point, you can scalp, you can day trade it, but you don't want to place a swing trade based on the single fundamental data point. What you want to do is to take a look at the consecutive of data to have a better judgment to whether a currency or whether an economy is strong or not. So that's a better way to do it. So other than that, again, the New Zealand the parliamentary elections, and we also have the federal election from Germany. But this is less important. This is very, very important for Europe, of course, but it's less important because it seems like Merkel is going to win more certainly. So unlike the New Zealand election where you have a 50-50%, for Germany, it's most likely that Merkel is going to win. And that's why it's not really going to create too much crisis for Europe. So other than that, so this week my plan, is very simple. For Aussie, there's no catalyst, not really planning to do anything about it. And my plan is really still focusing on Canadian dollar and British pound. Now, Canadian dollar is the same play because the catalyst is still strong. So even if I say the data point, even if the CPI is a miss, even if the core retail or retail is a miss, it's a good chance for me to get into at a retracement. So I'm still very bullish in Canadian dollar. And the pair I'm still interested to trade, particularly for this week, will be CAD Swiss or CAD Yen. And the reason is because we do have the FOMC coming up. So I don't want to get into dollar CAD. We do have ECB Draghi speaks. And we also have a New Zealand election. So that really just gives me a good choice, with Japanese yen and Swiss franc. But other than the catalyst itself, the fundamental bias between Japanese yen and CAD or Swiss franc and CAD is very, very large. Now, I will pay attention to the FOMC tomorrow. So if we have a very negative FOMC, then dollar CAD will be, we are at a pretty nice retracement at 38%. Will be a good place to sell. Same thing as cable. If we can have a deeper retracement, and if tomorrow the FOMC is provided to be negative, then you could buy at this kind of nice retracement zone. Of course, I stated already, the other trade I'm very interested to buy is the British pound. Now, this really is a brand new currency to buy because previously I'm quite bearish toward British pound. And now since last week, everything has drastically changed, and it's a fundamental change because you do have a high CPI, you have a Bank of England hinting that they are going to raise the interest rate. Now, of course, this week, Carney came out yesterday, and trying to talk down the currency, but it's a very normal tactic, for central banks they don't want everything. Again, the central bank's priority is stability for the financial market. So they don't want to have a one-way voice, basically. So of course, they know that pound has been shooting up straightly last week. So it's very natural for the Bank of England to come out and sort of talk down the currency. And you can just tell it's the same thing because yesterday, Bank of Canada, the official also came out to talk down the currency. So it's not a big drastic change. But I'm interested in British pound is because, first of all, the fundamental data has backed up. Right now, the inflation is really at a high level. And beside inflation, everything else is actually quite stable. Their economy is actually quite resilient. The biggest risk for UK has been the Brexit, and now it's still the Brexit negotiation. But it hasn't been able to create too much headline. And in the Bank of England, the official also came out saying that yes, Brexit will be a concern, but it doesn't mean they are going to do nothing about inflation. So that means that if the inflation continues to hit 3%, then they will have to raise interest rate. And that's why British pound is a very strong currency if we continue to have a high inflation right now. And that's pretty much it. That for the swing trade, British pound and Canadian dollar are something that's more certain for me. Beside that, US dollar, we have to see what happened to FOMC tomorrow. And again, watch out, you have 2 elections coming up this week. New Zealand is a bigger one. The German one, I think German has, like France, they have 1 or 2 rounds of election, things like that. I'm not really sure actually. I have to take a look. But anyway, for now, it's most likely not going to create too much volatility because most likely it's going to be a win for Angela Merkel. Okay, so that's pretty much what I'm looking at right now. Personally, CAD Yen, CAD Swiss. Now CAD Swiss, you can tell we have a very deep retracement already. And Pound Yen and Pound Swiss. That's for a swing trade setup. If you want to trade a catalyst, then tomorrow the FOMC, you can focus on dollar CAD or cable and looking for a chance to short US dollar if the FOMC is a neutral or negative event. Now, of course, we never know what is going to happen, so don't be too stubborn basically. And that's pretty much it. So I hope it's a very short video. Hope you enjoyed, and I'm myself really just start slowly getting back to become more and more active for the month of September. So again, hope you learned something here, and once more, I do want to stress the importance of understand your psychological level when you are trading. That's just something of my own personal experience. So I hope you enjoyed this video. Again, if you have any question, feel free to let me know. Otherwise, I will be back next week with another trading video. Thanks for watching. Bye bye.